Speaking of different markets, let's jump into real estate. This is something that I'm going to say has slowed quite a bit, but we're getting more numbers here, just get them every month. But we got existing and new home sales for the month of August. And I got to say, there's a stark difference between the two reports. The headline number for new home sales showed an increase of 15.4% compared to last year, while existing home sales were up just 1.8% over the time frame. So what the heck's going on here? Why was there such a big difference? That's a good question.
Yeah, new home sales increase of 15.4%, while existing home sales up 1.8. So, that's quite a big difference. But when you look at that, first important consideration is new home sales can be extremely volatile on a month-to-month basis, and they make up a much smaller portion of overall sales. Pre-pandemic, new home sales were normally around 10% of total sales, but with the limited listings in recent years, they've been closer to about 30% of all sales.
Yeah, we've seen a huge change in again, that percentage allocation in new home sales. And, one other thing that you have to understand with the new home sales and existing home sales reports is new home sales look at people that were out shopping and signing deals in August, while existing home sales looks at closing in the month, which means these were deals that were signed in June or July. So there's actually about, I'm going to say, make it easy on me, about a month and a half lag when you're looking at existing home sales compared to new home sales. And interest rates may have had a slight impact on that, because if you look at the 30-year fixed mortgages, around 6.7 to 6.8 in June and July versus around 6.5 to 6.6% in August. And also, too, many times new home builders are buying down rates even further for their customers.
I think that's probably a good part of it as well. And I don't know why they do that. If I was buying a new home, I wouldn't be interested in that. I'd rather just buy the house at a lower price, because they buy a house they sell a house for $500,000, and they say, okay, well, we'll give you $10,000 toward closing to buy down the mortgage rate, to do like 2-1 buy downs. They play these little games so that you as a buyer then have a lower monthly payment, but you are the one that's paying for it anyway, because you're buying the asset. They're using your own money to then give a little bit back to you, so you can be happy about the payment.
Yeah, and I think you're right, because if rates do decline, I much rather would have had a lower purchase price that now I can refi into that lower rate that you offered me anyways, where now I can't do anything.
Right.
The mortgage rates are falling.
Right. So, for the same reason we've talked about right now, I don't think it makes sense to pay points to refinance a mortgage. Wait till interest rates come down. You still might want to refinance. Jason and I are actually both looking at refinancing right now. It still might make sense to refinance, but you don't want to pay extra to get a lower rate, because you might be able to refinance and again in 6 months and not have to pay for it. So, but when you buy a new home and that seller is giving you credits, you're basically locked into that. And at that point, you have to take advantage of it, I guess. Yeah. But I don't know why they do that. I'd rather they just lower the price.
Because it still costs them money. But I bet you that it's almost that psychological benefit.
It is. It absolutely is. It's a sales tactic.
Yeah. Not to say trick, but persuade them to buy with this, and that's less of a hit to gross margin than if we just lower the price. There's more perceived value.
And it makes the house look more affordable.
Yeah.
So, you increase the number of people that can afford that payment. But again, I don't like the way that they do that.
Well, one other thing, too, that may be impacting the sales pace there is the amount of supply on the market. Right now, new home sales had a 7.4-month supply in August. That was actually down from a 9-month supply in July due to the higher pace of sales that we saw last month. And this compares to a 4.6-month supply for existing homes. One thing that you have to consider is home builders. They need to move the inventory much faster than an existing homeowner. Home builders do not want to hold excess inventory because it's just going to sit on the balance sheet. It's going to go stale. They want to produce that cash flow. Where a home seller, an individual person, they're like, I don't need to sell it in many cases. They're like, I saw that, my neighbor sold it for this great price. So
well, they've got one house to sell as opposed to a home builder who has a ton of houses to sell. They're in the business of turning over inventory as quickly as possible, where a home buyer, that might be the biggest asset they have, or a home seller might be the biggest asset they have. So they're more willing to wait essentially for what they think the house is worth.
And I think that's so important, because I think this has made homes sit on the market for longer. I was somewhat surprised by this, but homes are now sitting on the market around 31 days on average, as compares to 26 days last year. I think a lot of home sellers became unrealistic with the price they can get for the home, and also too how quickly homes would sell. I mean, during COVID 2021, people would
Sight
buy
unseen, same day. Yeah.
That is not happening now.
It shouldn't
It's
happen.
much different. But I mean, we're still seeing these high prices in homes, and it's interesting to kind of look at how you're having this back and forth, right? Where like, I don't think prices are going to go down a whole lot because people aren't going to be willing, if their house is perceived at, I'm going to say $2 million, they're not going to be like, oh, I'll take 1.5 for it. They're just not going to sell. But on the other side of it, I don't think prices will appreciate very much because people just can't afford for prices to continue to increase. And mortgage rates are not going back down to 3%. So I don't think that can offset a huge gain in prices. I think we're just going to see this subdued real estate market as we kind of move forward in the next 5-10 years.
Slow growth.
Exactly.